Assets under management for ETFs has grown 4 times since 2019 in Australia to over $250 billion. With investor demand growing, are you up to date with the latest trends in the ETF market? From Equity Mates Media, this is Basis Points, a show that helps advisors find small improvements that compound into big outcomes. I'm Bryce with my co-host Ren, and today we're speaking to 2 experts from Cboe, an exchange that processes 40% of all Australian ETFs. Ren, good to be with you.
Good to be with you, Bryce. Very excited for this episode. It is a fascinating story, Cboe. I think a lot of people in Australia, a lot of advisors even in Australia, may not be familiar with just how much they interact with this exchange. But that's what we're uncovering today.
And to unpack it all, we are bringing in the president of Cboe Australia, Emma Quinn, and Oran D'Arcy, head of listings APAC.
That's right, Bryce. Our first back-to-back interview here on Basis Points, breaking new ground. We're going to start by chatting to Emma and talk about Cboe's position in the Australian market, just how much trading activity goes through their exchange and what we can learn from that. There's also a slew of Cboe-only listed products that we're going to unpack and hear more about, both in this episode and throughout the year here on Basis Points. Then we're going to be joined by Oran to really dig deep on ETF trends, because Cboe, as a global company, is seeing trends happening around the world that haven't yet emerged in Australia. You mentioned that assets under management have 4x'd since 2019, up to 250 billion. But there's so much changing in the ETF landscape. Fees, a lot of fee pressure on fees, weighted average fees down to 24 basis points. The amount of assets in ETFs with fees of less than 10 basis points, up from 29% last year to 36% this year. The trend towards low fees is big and growing.
Crikey, what a jam-packed episode we have coming up. Now, we want to say a thank you to our launch partners, Cboe, Milford Asset Management, and Orbis. But today, a particular mention goes to Cboe.
Yeah, did you know that Australia has more than one stock exchange? Well, you probably do if you just listen to our intro. You might have, I would even go further, you probably have traded on Cboe without even realizing it. With approximately 40% of all Australian ETF trading happening on Cboe, they understand the growing interest in ETFs among Australian investors.
As ETFs continue to gain popularity, it's crucial to stay informed about the Australian ETF landscape. Cboe provides a monthly in-depth analysis of the entire Australian ETF market, including a breakdown of total assets, investor demand, and new products.
You can check out the report and subscribe at the link in our description or show notes, or you can go to cboe.com/funds report.
It's the ongoing support from our partners that ensure we can keep Basis Points free. Now, Ren, let's get into it.
Let's do it.
Emma, welcome to Basis Points.
Thanks for having me.
So we want to start with a bit of an introduction to Cboe. When we started research for this, we came across a stat that really surprised us, which is that 20% of trading activity in Australia currently takes place on Cboe. So to kick off, for those that are only familiar with the ASX, tell us a bit about Cboe.
So Cboe is a US exchange network. We've got about 27 exchanges around the world. We are the biggest trading exchange in Europe, the pan-European exchange there. We have our own exchange in the US. We're the 3rd largest exchange in the US. And in Australia, Cboe bought a business called Chi-X, and I know you had my predecessor on one of your other podcasts previously, and they started in 2011 and Cboe bought them in 2021. And that was Cboe's entrance into the Australian market. So since then, we have about 40% of the ETF market trades on us on any given day.
Wow.
We have, we've opened the door there for, people to invest in APAC ETFs. And then we've also given access to US managers who want to come to Australia and list their ETFs here as well.
So can you just explain how that actually works? Because I think people would be pretty surprised by those numbers. 20% of all trading volume in Australia, 40% of ETF trading volume. People probably only think they're trading on the ASX, but I get the sense that maybe they're not. So how does it actually work from a mechanics point of view?
From a mechanics point of view, brokers have a thing called a smart order router. They, by law, or by regulation, have to trade where they're going to get the best outcome for a client. And built into those smart order routers is both exchanges. So there is the ASX and then there's us. So we trade anything that is on the ASX is traded on Cboe. So anything that is listed on the ASX, we also will trade on Cboe. That's not the same the other way. So everything that trades on Cboe is not traded on the ASX. So all of our unique ETFs are not traded on ASX. So if you want to trade the whole market, you can trade on Cboe. And so
Nice.
Brokers who are connected to us, and that is the majority of brokers in Australia, will have a smart order router that trades on both Cboe and the ASX. So you're guaranteed to get the best price in the market from those smart order routers. It's not that they're trading on Cboe for any reason other than there's a price availability on us that is either equal or better than the ASX.
There you go.
Wow.
So for everyone listening, you've probably traded on Cboe and you may not even know it.
You would almost certainly, if you have a CommSec account, you've almost certainly traded on Cboe.
Wow.
So you mentioned that there were a suite of exclusive funds just listed on Cboe.
Mm-hmm.
So can you tell us a little bit about those funds and what's been the process to engage with the funds management community and convince them Cboe is the right option instead of the ASX?
Sure. So we have about 30 ETFs that are listed exclusively on Cboe, and they're the largest names. I think when my predecessor was here, he talked about some of the names that we had. We had, at that point, Alliance Bernstein, Janice Henderson, Schroders. Now we also have BlackRock. We've had Janice Henderson come back and list with us again in 2024. We've had Lazard. We still have Magellan. We're one of the first to list with us many years ago. And then, I know friends of the show, JP Morgan Asset Management, also list with us. The process is quite simple and similar to other listing venues. We really do talk to our global presence and being able to list with us globally. Someone like a BlackRock, they list on all 5 of Cboe's listing exchanges. They have ETFs, so it's a seamless global process for them. But also they see, there's a value in competition in Australia. I think a lot of these, without putting words into our clients' mouths, it really is about seeing a value in having competition in any market. And so they really are supporting the ecosystem in Australia by supporting the competitor there and offering that competitive tension to the incumbent.
Look, as we've said, many advisors and their clients will have already invested in or bought through Cboe, perhaps without realising it. And they also have access to many Cboe listed products through their wrap platforms, CFS Edge, Hub24. What's the experience been like partnering with the platforms and then introducing the concept of these almost 30 exclusive funds to the advisor community?
Certainly the biggest platforms, are connected to us, and we have really strong partnerships with a lot of the platforms, particularly Netwealth, Hub24, AMP North, Premium, all trade our ETFs daily, on a daily basis through their platforms. Certainly the crypto ETFs, we were the first to bring those about 2.5 years ago, so certainly had some strong engagement with the platforms there. There's still more work to be done, but I think we're very proud of the numbers that we get through the platforms. And I think then a lot of it comes down to how we engage with advisors through that. So we run a lot of advisor forums throughout the year, and it's not just in the main cities. We actually go regionally and take a lot of the fund manager partners that I mentioned before out to those advisors and give them education and let them hear about what's happening. There's some strong relationships there. And then we also have a market report, which I think you can just go on the website and have a look at and get on the mailing list for that. We have a report that shows all of the ETF market trades in Australia, so we don't just limit it to ours, we look at the whole market, and that's something that's free for people if they want to have a look at on a monthly basis what's happening in the Australian ETF market. So we offer a lot to advisors through education and advice.
And so what are some of the, common misconceptions that you find or you hear about Cboe that if you could look down the barrel and tick them off right now, what would they be?
I think firstly, I took this job about 18 months ago, having to explain to people the same question you asked me early on. There's 2 exchanges in Australia. I thought there was just the ASX. And look, that's okay. Cboe actually love to be number 2 in any market in that we're in. We're number 2 in Japan. We're number 3 in the US. We're the number 2 listing venue for ETFs in the US. So we quite like to be the underdog, but I would like to have to not tell people where I work and explain to them that it's Cboe, not CBOE, because that's how it used to be. Those sorts of things. I think the other misconceptions is that this is that we're a small company, right? We're bigger than Woolworths and WiseTech. We're as a business. So Cboe Global Markets. We're just a bit smaller than Telstra. So look, it's a big company, and we run exchanges, and technology is what we do really well. So the fact that we're this small incumbent makes me laugh, because if you go to our office in Chicago, we still have an open cry trading floor, and we have a massive a massive office there. So it makes me laugh because in the US it's such a big business.
Yeah, it's massive. Maybe that's what you guys need to, as like a marketing ploy, introduce an open cry trading floor to Australia.
Having been on one of those many years ago, yes, they are a lot of fun.
Yes. Probably not the most efficient way to manage orders.
Depends on the product. So for us, it's in the US, it's derivatives. So if anyone, the other thing that's Cboe is renowned for is obviously derivatives. That's where we started. And we obviously have the VIX index. So I've heard you on your opening one for the year talk about the volatility and expecting volatility throughout the year. The VIX is a good way to be able to access that, and that's certainly something that we will, helping Australian investors access products that Cboe have globally is certainly an important thing for us.
So we want to talk a little bit about how you see the future of the Aussie market and some of the things you want Cboe to bring to the market. But before we do, I just want to hold on some of these exclusive Cboe listed funds for one more question. You're speaking to a community of advisors at the moment. So I guess make the pitch. Like, why should the advisor community think about these Cboe exclusive funds as part of their clients' portfolios?
Firstly, I would say the important thing is that any listing exchange in Australia is under the same rule set as the other, and so there is no arbitrage between the two. We all have the same rule set. What we do differently is we look for innovative products where we really do work with the fund manager in terms of how do we get to understand their product better to make sure that it fits in the rule set of Australia, and really do walk them through the process. For example, Lazard, it was their first ETF, I think, globally for Lazard, and they came and did that process with Cboe because we helped them through that process. For example, BlackRock's factor ETF funds, we were the first to have those and bring those to Australia. So there's some really important innovations that we bring, and so we really do spend a lot of time with our issuers working through the process of getting ETFs to market in a quick and efficient manner, but also making sure that they're relevant for the Australian market.
Yeah, and I think an example of that is probably the crypto ETFs. You guys were first to market with crypto ETFs. What was the reaction like from the Aussie investment community when you brought them out?
Look, I think people reacted very, very well to that. I think it took a long time to get people to understand what they were. I certainly have a son who's very, very interested in crypto, and often had the debate with him about doing it. I'm now an unhedged owner of a crypto ETF.
He won the debate.
He wanted to buy it. I said no. I said I'll offer you the derivative of that, and I didn't hedge myself. So lesson learned for me. And so now I apologise. I probably owe him quite a significant amount of money that I'm hoping he doesn't listen to this and hear. But yes, crypto ETFs is a great way to access, that market.
So Emma, we now want to look to the future of Cboe. Now 4 years since entering the market here in Australia, what does the next little while look like for Cboe here in Australia?
Well, so it has been 4 years, but we've, as with the previous, with Tri-X, that came in 2011, and I think we've been innovators throughout that whole process. Certainly since the Cboe acquisition, we've done a lot in terms of technology. So in March in 2023, we moved our technology to the Cboe technology. So what runs our markets all around the world, and we're in 27 markets, that technology is used in Australia. So what runs the VIX market in the US we use here, and what runs the Japanese market that we have also is the same technology that we use here. What that does is it allows us to bring innovation to Australia very, very quickly. So if we see an order type, for example, that is working well in the US, we can bring that here. If we have a product that's working well in the US, it's very easy, not to simplify what our wonderful technologists do, but we can bring that here. And so really from our perspective, it's about looking at what's relevant to us, the Australian market, that we can take from other people's learnings. And so really what we've been focusing on is innovation. One of the things we've been public about is bringing a new listings market to Australia. So we will have Cboe listed stocks, so not just ETFs.
Oh, wow.
We'll bring companies to listings to list in Australia, or Australian companies who want to list here, hopefully subject to regulatory approval sometime at the latter part of this year.
Oh, nice.
So we're really excited about doing that. Cboe has 5 listing venues around the world, including Australia, and so to expand that to corporates in Australia, we're really excited about.
Nice.
Well, let me make an unsolicited pitch. Something that really frustrates me about the ASX is that we haven't competed for any of the Southeast Asian technology listings. We could be the gateway to Asia, but instead, C Limited goes and lists in the US instead. So I think that's the opportunity that the ASX have let slip through their fingers.
I think it goes to actually a point you made on your opening equity mates for the year, where you talked about valuations and you talked about superannuation funds and the higher valuations in Australia. That really does play into how we think about our business. And to your point is that we have all of this great technology companies in Australia. We have a great superannuation system in Australia, and how do we marry the two so that the Australian investor can invest in more here without pushing our valuations so high that other people don't want to invest in Australia because our valuations are high because of superannuation. So really what we've been looking at as a business, back to the original question, is really how do we improve the Australian financial market for Australian investors. It really is, at the end of the day, being able to give people more opportunities to invest in Australia, because eventually if we don't do something about that, either the market gets bigger and all of that money goes offshore, and we have companies here who can't list and can't get the investments that they need.
When you speak about that improving the market for Australians, and love to hear that, are there any particular pain points or any particular requests you hear over and over from the advisor and investor community?
I think people are just wanting more innovation, right? The derivatives market in Australia isn't as developed as it is in other markets. Certainly the derivatives market is where we get a lot of interest, and a lot of advisors do ask me when we will come into that market.
Do you have an answer, or?
Look, it's definitely on our roadmap. I'm not sure I'd still be employed at Cboe if I said that derivatives is not something that we would look at. But certainly what I would say is that we have a great derivatives market, in the US, and so if people want to access that, that's definitely, and it's something that they can do. There are brokers that do offer derivatives products outside of Australia, but certainly looking at the derivatives market, because again, you talked about you've talked about volatility a lot on this, or you talk about S&P falling 20%, a derivatives position is a great way to be able to do that, and to be able to hedge that that expectation.
Yeah. It is the noticeable difference between the Australian investor experience and the American investor experience. You just see even in the most retail retail brokers like Robinhood has like a full suite of derivatives offerings. And in some ways it's good, you know, like we protect retail investors from their worst impulses, but I think like you know, there's certainly space for more choice for
Less
investors.
choice,
Yeah, and to use it in the right, and some education around how to use it in an appropriate way to actually, you know, limit your downside.
Yeah.
You may give up some upside, but you're willing to do that to limit the downside. And so I think there's definitely an area there where we can help.
Definitely, especially as more like derivative strategies come to market through ETFs. It's like more and more we're going to be familiar with these, you know, covered call strategies and the like, and people are going to want to be able to do them themselves.
Definitely, and certainly things like defined outcome ETFs are very, very popular.
Yeah, okay.
In the US.
In the US, yeah.
And we can see that. Yeah, we're certainly getting some interest here on that.
Yeah, that's interesting.
As well.
Are there any other trends in the US that you're really noticing, or Europe, that you think will emerge in Australia more in the coming years?
Look, I'd say we will continue to say, I'm not sure that it's a new one, but I think ETFs just continue to, I know that you hear it a lot, but ETF mates is coming, but I hear that, you know, I do think that ETFs just continue to grow. I mean, what we're at the end of last year, it's at 246.
Yeah, it's crazy.
It's still such a small penetration here in Australia.
Yeah.
It's crazy.
Yeah, it is, and you know, but the growth year on year was about 40%. So I mean, we're getting there. But I think when you compare that growth to say the US market, it does lag. So we can certainly see some growth coming there and a trend there, and certainly that's where our business is positioned very well for a growth in ETFs.
Good time to be an exchange operator, isn't it?
It is. Yeah, and look, I'd also say that we're seeing far more active ETFs than just index ETFs.
Definitely a trend we've noticed with who we work with through Equity Mates, and also just the demand from the community in getting access to managers that have long been inaccessible. So it's such a great, easy way to be able to access a fund. If people want to learn more about what's going on a monthly basis in the ETF market, you can definitely go onto our website. We have a monthly report in there. It doesn't just include Cboe, we also include ASX listed ETFs. It shows you the investment performance of those ETFs, as well as inflows, outflows. So it's a great way. You can also you can look at it on the website, but you can also subscribe to our mailing list for that. And we'll put a link in the show notes for anyone interested.
Now, Emma, you might not be able to say too much about this, but you've mentioned throughout this conversation Cboe's technological prowess globally, and it does make us think that one thing our main market operator hasn't demonstrated in the past few years is technological prowess when it comes to settlement and clearing. The chess system upgrade did not go well. Is that an area that you guys are looking at more or bringing it forward in your roadmap because of the ASX's struggles there?
Everyone who trades in Australia is touched by the chess system. We have to use it at this point. There is no alternative in Australia to the chess system, which is unfortunate because there are these technology issues. I mean, this all started in 2017, I think, where ASX said they're going to upgrade it. Unfortunately, that didn't work out, and we're still in a position where we don't have a stable clearinghouse. In the press, they spoke about it. You know, it's 4 days before Christmas, we had a potential in Australia where our markets didn't open for days because the chess system was luckily had issues on a Friday and were able to be fixed over the weekend. But if that didn't happen, we would have had a situation where the Australian markets couldn't open to trade. Now, that is not a great thing for Australia.
No.
I would say, the regulators are very, very on the front foot about this, so I'm hopeful that we get some resolutions. We have good engagement with ASX over the chess replacement. It is a concern, though, I think, for Australia that there's been an underinvestment in technology, and that's why I think competition in that space or in any space is really important, because what happens in any monopolistic situation is that you can afford not to invest. Unfortunately for Australia, the lack of investment has happened in something where everybody within that market has to use that monopoly. Out of all of these issues, that we've seen with chess, there's just definitely a lack of trust in the ecosystem, and that has to, any robust financial market needs to have faith in the system is going to work all the way through from start to finish. And unfortunately, I don't think we have that just yet in Australia.
Well, Emma, that brings us to the end of today's discussion. Thank you so much for coming on, and thank you to Cboe for being launch partner for Basis Points. We're really pumped to have you on board.
We're really excited to be here, and really thank you for partnering with us and allowing us to bring through a lot of the new ETF issuers that we have and some of our other partners that are already listed on Cboe.
Yeah, it's going to be a very exciting year. So wherever you're listening or watching, make sure you're subscribed, because we're going to be speaking to some really exciting fund managers that Aussie investors can invest in through Cboe. Yeah. So Emma, we really
exclusively through Cboe.
Exclusively
Nice.
through Cboe. So Emma, thank you for joining us today, and we're really excited to see where Cboe goes and what you build for Aussie investors.
Thank you.
Thank you.
Well, Bryce, I thought that was fascinating. We love a bit of disruption here.
We do.
We love the competitive tension of capitalism,
Yes.
and the game is on.
Yes, Ren, we love a challenger here at Equity Mates. We're going to take a quick break, and on the other side, bring in Oran, Head of Listings APAC, to understand what trends are really driving the ETF market. We'll be right back.
Thanks to Cboe for sponsoring this episode of Basis Points.
Did you know Australia has more than one stock exchange? You might have traded on Cboe without even realising it. With approximately 40% of all Australian ETF trades happening on Cboe, they understand the growing interest in ETFs among Australian investors.
As ETFs continue to gain popularity, it's crucial to stay informed about the Australian ETF landscape. Cboe provides a monthly, in-depth analysis of the entire Australian ETF market, including a breakdown of total assets, investor demand, and new products.
You can subscribe to the report at cboe.com/fundsreport. Well, welcome back to Basis Points. We've just spoken to the president of Cboe Australia, Emma Quinn, about Cboe's role in the Australian financial landscape. But with 20% of overall trading activity and 40% of ETF trading activity going through Cboe, we wanted to know what Aussie investors were buying and what trends were emerging over the past few years. And to do that, we have Head of Listings APAC at Cboe, Oran D'Arcy. How are you, Oran?
I'm very well. Thank you for having me. Pleasure to be here.
So we want to start with understanding some of the trends that are coming through the ETF landscape, particularly here in Australia, where ETFs have absolutely exploded. Almost 250 billion Aussie dollars under management, 4-timesing since 2019. So where is the money going?
Yeah, look, you're spot on. It's been a great journey for ETFs in Australia. Since their inception about 20 years ago, they've grown slowly, and then all of a sudden, all at once, as is the normal way. We go back to 2019, there was about $55 billion in AUM in ETFs. Fast forward to now, we're looking at about $258 billion in AUM. So real, huge growth that we're seeing. It's been a pretty exciting journey, 40% year-on-year growth. Dramatic increase in adoption, choice for investors, and lots of competition in there. We look at the last 12 months, for example, it's been extremely exciting. We've seen, $30 billion flow into Australian ETFs. So lots going on there. Where is it going? Well, if we think about global markets and what's happened in the last 12 months as the example, we've seen the Australian index return about 11%. A lot of that was from the banks. So I know you've mentioned and talked in depth about CBA, for example. It's been buoyed as well by consumer sectors like JB Hi-Fi, and that's kind of offsetting some of the mining companies and the decline in iron ore prices and things like that. Over in the US, the S&P 500 finished up about 23%. Again, you've talked at length about the Mag 7. We've talked about things like the AI-related rally with NVIDIA. And Japan had big kind of milestones, ticked through their previous high, which was 1989. Fixed income markets have been, wild as well. Lots going on there. And then alternative assets like gold and Bitcoin have reached all-time highs that year. Now, where's the money going in Australian ETFs? Well, they've followed the market essentially. So we're thinking about how the flow went. We're looking at kind of global equities took about just under half of the flows for the year. So it's quite interesting. You see, a lot of that is US based. So Australian ETFs have kind of fairly broad coverage when we think about global equities, US specific. I mean, you can buy the S&P 500. You can buy that for 4 basis points, right? You can buy a more narrower thematic ETF. Think about a focus on the Mag 7. We've also got some pretty interesting active managers going in there. So just under half of the money has gone to global equities. Not surprising, because Australian investors really use ETFs as a diversification tool, a way to access sectors, regions that are otherwise hard to access directly. About a quarter of the flows went into domestic equities. So you're looking at, for the most part, broad indexes. So you can buy the top 200 shares in Australia for, again, 4 basis points. So very accessible, very cost efficient. It also looks to take out some of those challenges. You know, we talked about CBA doing well. You talked about some of the miners doing not so well. Well, you can buy a broad index that can get around that and give you a bit of diversity. So we've seen that flow into those markets too. Fixed income took just over 20% of the flows this year. Well, we can talk about that in more detail, but that's unsurprising considering the recent APRA announcement on the banning of bank hybrids. So some interesting things going on there. And then also, again, related to global markets, we've seen the remainder of the flow, which is about 7-8%, went into assets like infrastructure and, interestingly, commodities and cryptocurrencies. And of course, early mid last year, we saw US first Bitcoin ETFs come to market. We saw a huge surge in that market there, and we saw some flows coming through on the Australian investor side of things, which kind of go along with that. I think that's one thing that's underpinning that, outside of those global factors that I mentioned, is cost efficiency and fees going down, fee compression that we see in the market.
Well, I think that's probably a trend that we've certainly noticed in the time of doing Equity Mates. And as we're doing some research, we saw some data actually from Cboe Australia, weighted average fees down to 24 basis points. But another data point that I thought was really interesting was the amount of money in ETFs that charge under 10 basis points is ticked up. It's now, I think, it's slightly over a third of all money in ETFs, which is good to see. Competition bringing fees down, and investors realizing that the one thing they can control is the fees they get charged. So talk to us about the trends that you're seeing in the fee space. And, you know, are we going to get a free ETF at any point?
Well, they've been done before offshore. I'm not sure how successful they were. But look, no, you're spot on. And by the way, well done on the figures, because you're spot on. 34% of the flows are now in sub 10 basis point products. So yeah, you're absolutely spot on. Look, I think many of your listeners and many of us have read The Barefoot Investor, right? We know that fees eat profits over time. So investors are very aware of that. Product issuers are very aware of that too. So yeah, like you said, we've seen flows into products under 10 basis points really pick up. Generally speaking, this might even be a more surprising figure. Over 90% of the flows into Australian ETFs are going to ETFs that have a 50 basis point MER, or management expense ratio, or less. So they're really taking the lion's share. It's indicating a few things. So there's still a strong flow of funds into what you'd call index funds or passive funds. They typically tend to be of a lower cost. I mentioned, you know, you can buy the index here for 4 basis points. You can buy the S&P 500 for the same. The active managers that are coming to market now are very price conscious as well. They understand they need to come in at a very competitive price point. Some of the things that are really enabling that are ETF structures. So we're seeing now the use of the ETF feeder fund structure. That is where you have an Australian domiciled ETF, registered in Australia, trades in Australian markets in Australian currency, but essentially buys a larger at-scale product that's domiciled in, for example, the US or UK or Europe. These master funds, or the at-scale funds, are typically, you know, 2-3 billion or more. So they're really got economies of scale. They've got huge research teams that sit behind them. They've got, you know, a real, as much as you could ask for in terms of how to drive a strategy and how to get the most out of it. And by using that feeder fund structure, these managers are able to provide Australian investors with access to that absolute premium grade, investment grade solution offshore, but at a really competitive price point, leveraging those economies of scale that they have. So things like that are driving it forward. The market is a beneficiary of its own, I guess, success and growth and continued scale. So if we think about, there's 400 ETFs in Australia now, plus or minus. That's going to continue to grow. We're having lots of new managers come to market. And really what's happening is the whole ecosystem is becoming very adept at managing these funds at market in terms of growing them, providing liquidity. So we think about market makers, right? So there's 7 or 8 key market makers operating in the market, but it's not like it was 5 years ago or 10 years ago where they're kind of trying to find their way a little bit and trying to figure it out. They all know exactly what to do now. Everything is very efficient. The market quality is excellent. It's driving costs down, it's driving innovation up, and it's really driving up the quality as well. So we're getting, as we all want, more for less as an Australian investor. So this is just fantastic news for Australian investors, as it is. There's no two ways about it.
So Australia seems to always lag trends that are emerging overseas, and can certainly be the case when it comes to investment products and ETFs. So what are you seeing overseas that hasn't quite made it to the shores of Australia yet?
One of the key things we see in the US at the moment that is certainly going to come here, we feel, is options-driven ETFs. Now, they're ETFs that have embedded options. They act very much like a structured product. So what they try and do is achieve a desired outcome by using the ETF wrapper and embedding options within that. So to give you an example of what that might look like, there are a very successful kind of cohort of products called buffered strategies. So a buffered strategy, for example, is a defined outcome ETF. So for example, if you in the US want to buy the S&P 500, right, you want to get exposure to that, but you're a little bit risk averse. You can buy this product that will give you a 10% downside protection, or a 20% downside protection, or a 30% downside protection, which is you get to choose. And in return, you give a little bit of your opportunity to earn. You cap the top end of it a little bit.
Interesting.
And this size of the market's been very exciting in the US. They really got some steam going about 5 years ago. It's now at $170 billion in AUM, so it's already as big as the Australian market.
It's so funny, man. One strategy in the US,
It's tiny.
And it's really interesting. So, the adoption we see there is there's 500 products like this in the US now. 250 of those have come to market in the last 2 years. New entrants piling through. We're seeing interest in those products from offshore, and we're going to see them here. It's very much a white space. And to give you a little bit of an analogy of how this works, it's a bit like if you buy car insurance with, say, a deductible. So if you hit a small bump or a market downturn, your insurance or the buffer will cover the first portion of the loss. So say, for example, 10%. You only really start to feel the impact of that bump that you had if you go over 10%, if that's what you've chosen. And in exchange for that protection, you might agree to cap your top speed limit or cap your gains.
Yeah, I was going to say the analogy works on the downside, but where it breaks down is my car insurance doesn't compound at 20% a year and make me money.
Exactly. But and look, I think many people are searching for the right analogy, but look, they've got it right in the US, and like I said, it's a white space here, and we think about volatility in markets, U.S. markets in particular. It's for people who want to get a smoother ride with fewer surprises, and those who want to keep moving forward but avoid major setbacks. So these types of products really indicate the evolution of ETFs and their use in different global markets, and we'll see that here too. In terms of another one, just to keep an eye out for, I'm thinking about leveraged ETFs. So leveraged ETFs, really these are trading tools or directional tools. So some of the ones that are really enjoying a lot of trading at the moment are things like 2 times long Mag 7 ETF, 2 times long or short Tesla, for example. So look, these things are pretty interesting. We don't advocate using them all the time. They're definitely trading tools. It tells me a couple of things. It tells me that the US investors don't mind a punt, but it also tells me that the evolution of ETFs as a vehicle is on the way there. So it's a trading tool. It doesn't need to be kept as a diversification or set and forget. It can be used for trading and things like that. I did think of a use for you, Bryce.
Yes.
I know you've got a conundrum at the moment as you try and turn $500 into $5,000.
Yes.
So maybe I've given you a little bit of homework to do.
Give us a tip.
I don't know. Well, I can't give you a tip, but maybe have a look at 2 times long or short Tesla or Netflix. And
nice.
But I guess, look, the point is we see these products being used in a different way than we're probably used to in Australia. White space for both of those types of products that we see. So it's going to be interesting to see how that plays out.
Now, sticking on the theme of how Australia is different to the rest of the world, Cboe operates in a number of markets globally, and so you see investor behaviour here and you can compare it to investor behaviour overseas. How are we different to some of our peers around the world?
Yeah, look, it's an interesting question. I speak with my global Cboe colleagues. We have listing venues, as Emma pointed out, in the US and Canada, UK, Europe, and I spend a lot of time speaking with them. I've also worked in the Australian market for about 15 years, just in case it wasn't apparent with my strong Australian accent. Really, what we see, when I think about the ETF market here in Australia, we're actually quite the envy of many of those global markets in that it's very much retail driven here. So I'm always so impressed when I speak to Australian investors. I think your podcast and entire media operation is a testament to that. The amount of people who are interested in the markets and try to educate themselves. Everybody knows something about what's going on. So we're definitely the envy of that. So that's one thing that I would say is quite important in Australia. I think when you look at the US market or you look at those overseas markets, they've got a very strong institutional investment base in there, and they're really trying to grow that retail side of things and cater for that kind of demand of what comes with that. We're very much, we have the retail, we're trying to help people educate themselves, inform themselves, make good decisions, help advisors who are very much the bedrock or I guess, the gatekeepers to, financial security and success for all Australian investors and all Australians generally. So we're trying to just really push forward on that a little bit. I think we'll see the introduction of institutional investors come to the market in a bigger sense here, and they'll add scale and increase liquidity, which will be positive. So I think that's one thing that's a bit different. Australian investors, retail investors, typically know what's going on or are trying to find out what's going on. So that's really positive. I guess one thing that we don't do here, and I touched upon it a little bit with some of the kind of jesting comments about the trading type ETFs. I think in Australia we're still looking at ETFs as a vehicle for strategic deployment of funds to get access to a region or a sector. In different parts of the world, they've developed their use and they're using them as trading tools. We see some institutional firms use it for cash equitization, short-term placements as they look to see how they want to place their cash. So these are the type of things that are interesting. I think this develops over time as we continue to get scale. We get more choice in the market. We get some new kind of innovative products coming in there. We get people who have now become much more au fait with how you use ETFs and how else you can use them. So I think that's what's going to change.
Yeah.
So Oran, to close, and I guess focusing more on the short term here in Australia, are there any other trends that you expect to really emerge over the next sort of 12 months or so?
Yeah, absolutely. What we see is the growth of active ETFs coming in. It plays into what I'm talking about with respect to increased choice for Australian investors and aligned with that fee compression like I mentioned. So last year there was 64 ETFs listed in Australia. Half of them were active managers. There were 8 new issuers came to the market. They were all active managers. So we're starting to see this push forward. In the US, there's about 26% of all ETF trading is in active funds. It's not there with us yet here in Australia, but that's going to change. And then very briefly within that, fixed income active ETFs are going to be huge. We touched upon the hybrids in the scenario there. We've seen a raft of new high quality fixed income active ETFs come to market, just expanding that choice. 70% of the launches since December, in fact, have been active fixed income ETFs.
Wow.
So looking to cater for that demand and that need. There's $43 billion currently held in hybrids. That's going to need a home pretty soon. And it's giving something for investors to think more about, more choice at a great price point, and just something to think about in that respect.
Well, Oran, thank you for the insight. Thank you for joining us today. I'm very excited about where the Australian ETF
2 times leverage.
Yeah, where it goes from here. Maybe think about 4 times leverage rather than 2 times leverage. That might help Bryce get there. But it's been fascinating to learn about Cboe Australia's role in it all. 40% of all ETF trading volume. Didn't know that. So thanks for joining us and sharing your insight.
It's been my pleasure. Thank you.
And a huge thank you goes to Cboe for supporting the launch of Basis Points. Without them, we wouldn't be able to continue to keep this content free. And we should say a thank you to Milford Asset Management and Orbis as well. But Ren, we'll leave it there and pick it up next episode.
Sounds good.